this backtesting session. So I took one trade on this day. It was a win. It was on NQ, and basically I was bearish going into the day because overall long term, like on the big time frame, I'm still bullish. Because like I said, I want this to be a protected low, and I want to see us to start. What the heck? I want to see us start taking like targeting all of these internal highs here. But I was bearish going into this day because we've now taken out this internal. Sorry, this is glitching pretty bad. Can we lock in, please? Apparently not. Okay. So on the 4 hour, we've now taken out this internal buy side level inside of this weekly for value gap. So I'm expecting to see obviously some sort of reaction lower before continuing higher overall. Now, where would I want to see us move? Like lower? The intermediate low. So this is a 4 hour low inside of an already existent 4 hour for value gap, and it's in line with equilibrium of this price leg here. So I want to see this be the draw on liquidity for the time being before we go back to buy side. So that's why I'm bearish going into the day. Also notice 4 hour bullish for value gap ends up getting ran through to the downside. So this is now an inverse for value gap. We come up, test it, respect it, and now we're selling off again. So this is what I expect to be the draw on liquidity. So going into this particular day, as you can see, we have data highs here. At 7:30, we put in a high, and then market opens. We immediately trade higher. Big, massive candle here trades higher, takes out data highs here, and then we put in an SMT with ES. So ES did not end up taking out this high here. So as you can see, ES, this is the pre-market high. ES does not take this out when the market opens right here, but NQ does. So we come up, ES had already taken out data highs, NQ takes out data highs, puts in a bearish SMT. Now what does NQ do though? We leave this big O massive bullish imbalance. So I'm not bearish until this gets ran through. I'm waiting for this to get inversed before I take my short. And actually what I did is I waited for the 2 minute to get inverse. And the reason that is because it just gives you a more high probability setup. So instead of waiting for the 1 minute, wait for the highest time frame inversion for value gap on the manipulation price leg to get ran through before you take your entry. So since this is the last move higher that sweeps liquidity before the market displaces, you want to take the highest time frame inversion for value gap in here, which is a 2 minute. Because if you notice, if we go to the 3 minute, there's no for value gap. 5 minute, no for value gap. Obviously, there's not going to be one on the 15 minute. Now there is one on the 1 minute, but the biggest time frame for value gap is the 2 minute, which is why I wait for the 2 minute to close down here before I take my entry. So my initial short was here, and if I put the executions on, you can see I had a big stop on this, and the reason I had a big stop is because I was expecting this inverse for value gap to get revisited. So I wanted to give the market room to breathe, room to rebalance before we get the sell-off. So that's why I have my stop all the way at the high. It's like a 1-to-1, but usually I end up getting better risk on these trades because what happens is when we come up into this inverse for value gap, then on the like the 15 second, I usually zoom into that and we'll put in some sort of internal high, but then sweep the high, put in like an SMT or something, and then get displacement. And when, that tells me like when the market's ready to go. Like I know like we should reject from this overall area, but the 15 second internal manipulation will tell me when the market's ready to move, and that's when I will usually add a contract and then trail my stop to whatever high gets put in. So, but the reason I enter a short initially is because in case the market just dumps without ever rebalancing, I'm still catching the move. But more often than not, we're going to rebalance to the inverse. I wait for that internal price action to get put in, and then I add sizing and scale into my position accordingly. But basically, my target for this trade was pre-market lows that we put in at 7:15. It looks like this was also some sort of news release, which means this is a data low, making it an even stronger draw on liquidity. But also, I was thinking about leaving runners to standard deviation. Obviously, it ends up getting respected beautifully, but I just didn't. I don't really know why. I was just being a silly goose, but I should have left runners to standard deviation. But if you don't know what standard deviation is, it's a measurement of the last manipulation leg before the market displaces. So the now last manipulation leg is what? The low to the high of the move that sweeps liquidity before we get displacement. And if you measure from the low to the high, 2 to 2.5 standard deviation is like a magnet for price. It's so precise. It's so algorithmic. I've seen this happen like literally thousands of times. And the market will come and will literally tap standard deviation and then respect it. It's crazy how precise it is, but it basically adds confidence to like an already existing bias or an already existent draw on liquidity. Um, But yeah, that was the trade. Very nice model. Nice little internal market maker sell model here. And now I'm sure some of you guys might be wondering why I'm shorting with this bigger time frame bullish SMT. The reason is because this doesn't really mean anything to me. Like you have to view SMTs with context. Like what would be the reason for this to hold? Like, I mean, there's not really a whole lot of reason. Like, the 4 hour fair value gap gets absolutely obliterated here. Buy side's been taken out on the bigger time frame. We're in a weekly fair value gap, selling off. We expect to see a rebalance to this big old massive bullish price leg here. Like I said, the 4 hour intermediate low is like a magnet for price. So once all this happens, and once this gets displaced through, this becomes the draw on liquidity. So I don't care about some dumb little internal SMT plus. Even if this SMT were to end up playing out all the way to buy side, what would have to happen first? The bigger time frame for value gap here would need to get ran through, and we'd need to get a change in the state above this level here. So like I'm not even like I'm the only reason I have this drawn out is because I recognize the SMT, but I'm not trading. I'm not making my bias based off of a simple little SMT. I'm making my bias based off of what the structure and what the market's showing me, which is that buy side's been taken, we're displacing lower, we're running through the bullish 4 hour imbalance, and we have an intermediate 4 hour sell side level here that I expect to be the draw. So I don't really care about some dumb little SMT. I just had it marked out, just like I said, because I recognize it. But like you have to trade structure, not you don't base an entire bias off of an SMT. But anyways, it's just an SMT is just extra confluence. But yeah, that was the trade. Very nice setup.